Hello everybody, it's me the Boss Hog, and today we're going to look at my stock portfolio and what it's been doing for the last week. It's still at 98,000 for the third week running. I am trying to move it higher, but as you'll see in a sec, it's been an eventful week slash 2 weeks, and within that there's some interesting things happening, so let's have a look at those things now. Alright, so honestly, not a dreadful week. The week itself was all over the place. You can kind of see there in the middle of the week it was sort of really spiked, four-figure lost. Friday was pretty interesting as well. It hides some interesting things when my UK stocks just got hammered. Luckily, I was rescued by a couple of stocks. And yeah, in general, although like it was only a net sort of 0.2% down on the week, it really hides some big movements. You can kind of see here, right? EPD. Oh, by the way, I've ordered these in terms of the impact they have. So EPD, it's my fourth largest holding, I think. So that being down 7% hurts. And in Games Workshop, minus 8%. I mean, I think this is a really quality company, and just randomly, I cannot find any news on it at all. My goodness, have I tried? On Friday, it just went down 8%. No idea why. I mean, it was hardly expensive. To be fair, it was hardly expensive for Games Workshop. It is an expensive stock, but for a good reason. Hollywood Bowl showed some life, so plus 4%, so that was quite nice. Polymetal, my gold hedge down minus 4%. Lockheed Martin minus 11%. Now, in fairness, as you'll see in a second, I did buy into that, but so I wasn't feeling the full impact of that minus 11%. And then Dark Trace here, Dark. This is one that I haven't really mentioned before. It's a relatively new position for me. I haven't mentioned it previously just because it wasn't even 0.5% of my portfolio. Recently crossed that, which is my kind of self-imposed level to start talking about stuff. And they had a 15% fall off the back of an analyst note that suggested it had a pretty steep run up since its IPO, which it definitely has. But anyway, that's what's been happening. Pretty wild. Definitely a more modest week in terms of trading, especially if you compare it to last week where I fully traded, about 12% of my portfolio. This time I really focused one stock in my personal ISA and then one stock in my wife's ISA. So, two stocks I was selling, two stocks I was buying. There are a few others as well, but those were the main two movements. So you can see there, about nearly 4 grand of stuff sold. I did add some capital, £400. This is my normal now, and I expect that to be the same until the end of December, basically. That's what I've agreed with my missus. And one dividend this week, the tail end of October. This was expected. This is Gamma Communications, which is a UK-listed growth telco company. I really like it, but we're going to talk about it in a little bit because it's about to come up once again. So that's the summary this week. Like I say, it had some pretty big movements. On some days, I was definitely rescued by some stocks. On other days, that was completely crushed. So it was just very volatile, really. And to be fair, the fact it was such a small variance, compared to what it had been, is kind of almost surprising and I guess quite relieving in a way. But anyway, without further ado, let's have a look at our buys and sells this week also. All right, so my biggest movement this week is Bristol Myers. I believe even in the low 60s, low to mid 60s, this stock was undervalued. Needless to say, at 57, and in fact a couple under 57 as well, I think it's really undervalued. I'm not a farmer expert, but I have listened to some other people. And the lowest I've seen, I think, is about 80. The highest I've seen was something like 146. That was pretty crazy, but I think it's broadly agreed that the earnings were pretty solid. I thought actually, I think the earnings adjusted were up 23%. And the revenues were up I think it was 10%. I was pretty happy with it. They also gave good guidance on the recovery of things like cancer drugs. Yeah, they have a couple of end of life things coming. One next year, I think one 2026, and then another one in 2029. But this is a nature of drugs company. And look at their pipeline, and it's humongous. So to me, this is enough risk reward. I wanted a big pharma play. Basically made Bristol Myers it. It is now my second largest holding, and I have an average just under $60. I think it's $59.85. I'm really happy with that buy for the long run, even though I'm sitting on a sort of 2% paper loss at the moment. I have to say, some of these results who were disappointing was Lockheed Martin. I think they kind of owned up to it, but then they also tried to deflect with a bunch of waffle about, doubling down on shareholder focus, which honestly is exactly what I expect a publicly listed company to be doing 24/7, right? They're literally there to serve their owners who are shareholders. So, I mean, I don't know what they were doing before. Anyway, I only had 2 shares in this company beforehand. I was in for about 336, I think, as an average, and I wasn't really caring too much because basically I was funneling my dividends into Lockheed, so I basically built up a couple of shares in Lockheed as a result. Obviously, it crashed like 15%, I think, at one stage. I started buying shares at 332. The best shares I bought were at 326, and that averaged out to 330. Now, to be fair, at the time, I kind of thought I was getting like a really fantastic deal. Since then, I've done a little bit more reading, watched some videos of people who are smarter than me, and to be honest with you, I think 330 is still a solid enough buy, but it's not quite the deal of the century I thought it was when I was getting a bit excited and buying as fast as I could. That said, however, I think it's good to have a kind of counter-cyclical, like a defense stock in your portfolio, just because one of the best ways to destroy capital is war, and it's good to have a hedge. So my plan with Lockheed, and maybe another one at some point in time, is to basically have about 5% of my portfolio in defense stocks, and treat it very similar to like a gold hedge, right? I'm also looking to have 5% in gold hedge, and basically have the equivalent of 10% hedging between war and gold. And be pretty happy with that. So for me, this was a good chance to buy into Lockheed at reduced rates. Again, I think this is a fair cost. I think sort of anything under 340 won't serve you wrong. Obviously, if it dips lower, I think it's an easy buy. And pleasingly, to be fair, although their revenue and earnings both missed, they still throw off a lot of cash. So I have no worries about this for a business. They're still comfortably able to pay me dividends and everything else. And I think, reading between the lines, it seems like they just got some things wrong, maybe some supply chain constraints. Obviously, the US is withdrawing from a few regions as well, probably all impacted. They also, there was a big something about, one of the nuclear programs was being renationalized. That was like a 340 million. Oh, it's the atomic weapons were being renationalized. That was like 340 million. There was a few other things in there as well that maybe they could have guided better on in advance. So anyway, I think I'm happy. Like I said, it's not quite as exciting as I was when I was buying it, but still, I'm happy enough to buy it at the 330 average. So Dark Trace, I did mention, basically, I think it was Peel Hunt, but one of the investment banks published something that was incredibly bearish. In fairness, they floated it sort of like 250. The share price has gone all the way up to nearly £10. Since then, it's come back down a little bit. I'm around the sort of mid-sevens regions as an average, so I'm basically buying at cost at the moment, and I decided just to top up. I think this is fine. It's actually recently entered into the FTSE 100, so that's cool. And yeah, it's just basically a sort of defense / cyber play, so I think you can't go wrong with that. And Gamma, I touched on them, and I have mentioned them beforehand. I must do a video on them actually. But again, I think it's just a really great telco company. I wanted to buy the shares under £21 just because I guess I'm really bullish on what they should be, sort of 24, 25. I could have been more patient when it fell, following the results, but now I'm really happy to be picking up, additional shares at sort of £18. I think I'm getting a really great buy price at that sort of level for a company that's consistently sort of had smashing numbers on sort of return on capital, growth, earnings, margins. It's just, again, a very well-run company. And because I, working in the industry, have some idea of how it's built, I'm very capable. I think it's a very capable company of scaling very well. So although there's like some concerns as they start to expand beyond the UK, I'm actually not concerned by that. I think they've put in place really great scalable platforms, and I think they're going to make a lot of money. So again, for me, this is a really great chance to buy lots of shares. Obviously here I bought over £4 worth of shares, but I only put in £400 worth of capital. So in order to make that equal, I had to do some selling. So let's have a look at what I sold next. All right, so first up, I decided to trim my Huntsman Corporation holdings. At one stage, this was my largest stock. I think it's my third largest now. It's still a significant part of my portfolio, and even after selling 100 shares, I still have 500. I considered Huntsman worth about $32 before the activist investor got involved and sent it flying. So I've kind of been sitting on what I think is a fair value stock, but I didn't want to sell because, first of all, I might be wrong. But actually, I wanted to see what the activist investor's point of view was, and unfortunately, I still don't know that. He doesn't have to publish anything until December, so we'll see. But I also wanted to see what their earnings were looking like, and actually, to be fair, their earnings were really good. They sort of beat earnings expectations. I think it was about 18%. You know, some really good news for like shareholders in terms of both the dividend and buybacks, which worked out at 320 million a year, which, considering, you know, the business is only like an 8 billion market cap business, this is sort of really great. Less than that, actually. It works out nearly 5% a year, sort of giving back to the shareholders, so that's really exciting for me. So I think, to be honest, I'm more or less happy with my holding now for Huntsman. I think I've found myself a really great industrial. I don't see it mentioned very often. And actually, their earnings were good enough that it makes me think that they probably deserve an increase in my opinion about what they're worth. Almost all of their divisions are up, with the exception of automotive and aviation. And, you know, a combination of sort of COVID and chip shortage is very easy to explain on those. Again, the company is very confident it can pass through costs as well. You know, it has very desirable products, and it has a very fancy factory upgrade going online in Q2 next year, which is apparently still on schedule. So everything seemed good, basically. Again, I'm not a chemist here, but I think I can read numbers well enough, and I really like the direction that the company is moving in terms of, you know, they're no longer really that worried with revenue. They're much more interested in earnings, and that, to me, again, I much prefer a nimble, efficient business, which is what I think Huntsman is turning itself into. But like I say, I sold out at 32.40 for these 100 shares. I think that's a very fair value. I'm quite happy with that as a sale, to be honest. Because I was buying into BMY, which I think is very materially undervalued by maybe like 30%, maybe even more. You know, like, even if Huntsman has improved itself like 10%, then, you know, it should be like $35, $36 a share. I still think it's fine to put some money into BMY, and that's what I did. But yeah, I still remain very bullish on Huntsman. I think it's a very good sort of company that's reinventing itself very well. Maybe that's a better way of putting it. Last but not least is EPD, and again, this is another one that at one stage was my largest holding. I think it might be fourth or fifth now. Got very active movements in some of my portfolio. This is basically a pipeline business. I think it's the best one. There are a few others as well. It's up for debate, of course. One of the best things for me as a Brit owning EPD is that I have no tax on it, which is unusual for an American shares. Normally I get 15%, right, as withholding tax, but I don't get that because it's a master limited partnership. And I also don't have to fill out a complex tax form that the Americans do, because my brokerage takes care of it for me. So I basically get the best of both worlds here. You know, to me, this isn't going to set the world on fire. Its dividend growth is very modest, but its dividend is like in the 8% region, so it doesn't really need to grow very much. And actually, for me, I still maintain it's worth about $28 a share. I sold 65 shares, which was a little over 10% of my holding, about 15% actually of my holding, at $24.42. Now, since then, it's fallen back almost $2, so this kind of feels quite good, actually. I sort of accidentally made a £100 profit here on my trading. Again, I put this money into LMT. It wasn't deliberate. This is definitely lucky. EPD did go ex-dividend on Friday, but it's only 45-cent dividend, right? So it doesn't really explain this sort of drop. To me, makes no sense at all. And actually, you know, if EPD goes back underneath $22, I might get tempted to start adding to my shares again. I think it's a very fine price, and you get like 8.5% yield as well with no tax. That's pretty great. I guess I should just comment on the fact that Lockheed Martin is also here as well. This is a bit of an own goal for me. It cost me a whole £1, but in the excitement of trying to like buy into a falling knife, I guess, I accidentally pressed the sold button instead of the buy button on my brokerage, and put in, like, what's that, a tiny amount of shares. So luckily, no real harm done. It literally cost me £1, 1 pence in sort of trading fees and currency conversions. Just in case anyone was wondering why it was there and I'd like lost my mind, it was definitely an accident, and I'm very silly. Anyway, like I said, I'm very happy with my buys and sells this week, actually. I think I'm more or less, I think I made good decisions. I'm happy with what I did. And actually, I'm relatively happy with how my portfolio finished this week, considering some of the crazy stuff that was happening on both Wednesday and Friday. Wednesday, my US shares got hammered, and Friday, my UK shares got hammered. And, you know, I just had to overcome some variance there. So, fine. Anyway, there'll be my monthly portfolio video coming up very soon. So for now, I'll leave it there. I've been the Boss Hog. Thank you very much for watching, and good luck with your investing. Bye for now.